EOG Resources. If you follow the energy sector, you definitely know the name. They're one of the absolute giants of U.S. shale. But how do they consistently pull off great results in an industry that's famous for its insane booms and busts? Well, they've got a playbook. And in this explainer, we're going to tear it down piece by piece. Okay, let's get into it.
So this is really the central question, isn't it? It's not just about finding oil and gas. It's about building a business that can absolutely thrive when prices are high, but also survive and even win when they come crashing down. EOG is convinced they've cracked the code, and we're about to see how.
All right, we're going to break this down into 5 key parts. First up, we'll look at their core philosophy. Then we'll dive into their financial discipline and their operational secrets. After that, we'll see how all that hard work actually pays off for investors. And finally, we'll get a peek at where they're headed next.
So let's start at the very beginning with their foundation. They have this concept they call sustainable value creation. Now, it sounds a little bit like corporate speak, but it's really all about one thing: being built to last, no matter what the crazy energy market throws at them.
And this quote, straight from EOG themselves, really nails their whole strategy. The key phrase here is highest return and lowest cost. Think about that. They're trying to be the best and the cheapest at the same time. It's a simple goal, but it's incredibly difficult to actually execute day in and day out. So how do they pull it off? Well, they build their entire company on these 4 pillars. You've got the smart money with capital discipline, you've got the efficiency in the field with operational excellence, and holding it all together are the foundational pieces of sustainability and culture. In a business this complicated, all 4 have to be working in perfect harmony.
Let's dig into that first pillar: capital discipline. Really, this is just a fancy way of saying they have a very, very strict plan for every single dollar they spend. It's the financial engine that drives the entire operation.
And the rules for their money are crystal clear. They keep debt extremely low, what they call a pristine balance sheet, so they can weather any storm. They only put money into projects that promise really high returns. And, this is a big one, they have a non-negotiable commitment to paying their shareholders through dividends. Whatever's left over gets put back into the business. It's a cycle designed to prevent them from ever overspending, even when times are good.
So does this strict plan actually work? Well, the numbers kind of speak for themselves. In a single 3-month period, they generated $1.4 billion in free cash flow. Just think about that. That's pure profit after every single bill is paid and all investments are made. It's a massive, massive number.
And this is a perfect example of how those pillars all work together. They figured out how to be more efficient out in the oil field, which meant they didn't need to spend as much money. The result? They just lopped $100 million right off their budget. That is capital discipline in action.
And that efficiency leads us right into our next section: operational excellence. This is the smarter, not harder part of the playbook. It's all about how they actually get the oil and gas out of the ground better, faster, and cheaper than their competitors.
A big part of their secret sauce is that they do almost everything themselves. They don't just go out and buy up land that someone else has already explored. They do their own exploring from scratch. They rely on their own internal technical wizards, they build their own proprietary software, and they even source their own materials, like the sand for fracking, all to control costs and their supply chain.
Let's look at a concrete example. In the Utica shale play, which is over in Ohio and some neighboring states, they took on a new acquisition and immediately applied their own tech and expertise. And the result? They were able to get their entire drilling plan done with 1 less rig than they originally planned. That's a huge amount of money saved.
And it's the exact same story in their other big production areas. Out in the Delaware Basin in Texas and New Mexico, they're now drilling wells that are 20% longer, which lets them get way more resources from a single drill site. And further south, their Dorado play has become the single lowest cost source of dry natural gas in all of North America.
This chart right here really shows why being the lowest cost producer is such a superpower. It shows the price that natural gas has to hit just for a well to break even. For EOG's Dorado play, it's just $1.40. Now look at the other major competing fields. They need a much higher price. That gap is a massive competitive advantage. It's a huge safety net.
Okay, so a strict money plan and super efficient operations. That's all great. But what does it actually mean for the people who own the company, the shareholders? That brings us to the ultimate goal of the whole playbook, the shareholder payoff.
And they have an incredibly consistent track record. Just look at the total shareholder return here.
It's solid and it's growing. And remember, that number is the combination of the stock price appreciating plus the cash dividends they pay out. It's the tangible result of their entire strategy.
And again, let's just zoom in on a single quarter to make this real. In the third quarter of 2025, they gave back $1 billion to shareholders. About $600 million of that was through their regular dividend, and another $400 million was used to buy back their own stock, which makes every remaining share just a little bit more valuable.
And you know, this isn't some new fad for them. They've been paying a growing dividend for 27 years straight. That kind of consistency is just so rare, especially in the roller coaster world of the energy sector. It shows a deep, long-term commitment to their investors.
Okay, so that's the playbook that got them to where they are today. But what about tomorrow? What's their next frontier? Let's take a look at how they're planning to keep this whole thing growing.
Well, they are absolutely not sitting still. They're taking their expertise in shale drilling and going international with new projects for oil in the United Arab Emirates and for gas in Bahrain. At the same time, they're building out infrastructure like pipelines so they can sell their products to the best markets and get the best prices. And then they lock in that revenue with long-term contracts.
This timeline shows you exactly how they're de-risking their future. It lays out how much of their natural gas they have already pre-sold in these huge 10 to 15-year agreements. They're literally locking in their customers and their prices years and years in advance. It creates a stable foundation of revenue no matter what the daily market decides to do. So there you have it. EOG's playbook is built on this foundation of financial discipline, operational excellence, and a deep, deep commitment to its shareholders. They've used it to become a leader here in the US, and now they're taking that exact same model around the world. The only question that remains is how this highly tuned machine is going to perform as the global energy story enters its next, and you can be sure, unpredictable chapter.